All right, guys, what's going on? It's Eric here with Traveling Trading. So I'm going to review some of the trades that we went over pretty much last week, as requested by some of you guys in the chat room. So what I'm going to do here is just briefly touch on those and touch on the swing alerts, and kind of give you a little bit more insight as far as trades and what to look for throughout the day when you're getting the alerts and whatnot. Okay. So this will be a pretty quick review. Won't be too much going on here because obviously it's 3:30 Pacific time. Um, 6:30 Eastern time. It's pre-market. Uh, Market's looking good. Um, Not too much action going on though. Pretty much everything that was on the watch list is hitting already or already hit, and now we're just pretty much waiting to see what the rest of the day brings. So I'm going to quickly go over this with you guys, let you look it over, and we'll pretty much go from there. Okay. So let's get everything going. So pretty much, of course, this is DUNT, and this was just one of the swing alerts we went over. Obviously, if you traded the swing alerts, you're doing pretty good. This one played out well, but let's take a look at the other one that was alerted for swing alerts last week. SPCE. Obviously, they had their launch yesterday, which was pretty successful. Um, right now in pre-market, it's not really doing too much movement. So it shot up all the way up to the $60 level, which is where I told you guys last week the resistance was at. If you don't remember, right here, the launch coming up July 11th, blah blah blah. I said it was resistance in the $60 range, so get in where you fit in, kind of thing. So, anyways, you can go through that and read that at your own leisure. But anyways, by now, if you have an exit position, take your profits. I don't know what to tell you, but anyways, so SPC played out really good as a swing trade alert for you guys if you got a handle on that one. Um, so that should have been pretty well played out for you guys. So let's take a look at some of the day trade alerts that went pretty well last week. Let me see a few of them here. So I believe it was Sally that had asked about the difference between one of the stocks that ran, I believe, which was CARV and COHN. So I'm gonna kind of go through and elaborate on that one for you guys real quick and how it's seen the difference between those because I believe they were both alerted around the same time and actually around the same price and things like that. And she had asked, what made me choose to trade CRV as opposed to COHN, um, and deciding which alert to trade. And I mean, yeah, both the alerts played out really well, even though they came out back to back. But you know, the one was a little bit more easier to trade than the other. And the reason why, the big thing why, which you probably, you're not usually told on the alerts or kind of told unless you know about trading stuff like that, is when I was looking at the two, what I kind of mainly kept my eye on. Well, I didn't mainly keep my eye on, but one of the things I did consider too was the spread. If you're not familiar with the spread, is I kind of go over that in the course, but looking at the spread between the two stocks, kind of what led me to make my decision to choose CARV versus COHN. And I'll kind of go through that here in a second, but this is pretty much how CARV played out. And it was a really, really good move. If you didn't, trade that alert. But let me see if I can pull this up here and see when it was alerted. Because I made like a 24% move on that the first day, and I believe it went off again. I made another 50% move. Um, yeah, on both days. So look at that. This thing was kind of a beauty to play. Pretty easy. So let's take a look here and see what we're looking at with these stocks, between the two, CARV and COHN. So pretty much this is CRV. Obviously, it was alerted, um, and the thing just took off. So you had plenty of time to kind of get in and out. I won't go over, your entries and exit points because by now you guys know how to trade. You should be able to kind of distinguish that at this point. And then let's take a look at COHN. And if any of you guys ever need me to kind of go into it a little more detail, we'll do that. Now this is COHN's chart for the last few days, which again was alerted around the same time as CARV. Now, if you notice between the two guys, between the two charts, let me see if I can actually pull it up again here so you guys can kind of get a little flip through. And I'll just kind of compare and contrast the two for you here. So let's say both of these things go off of the alerts. Obviously, with the alerts, it's just telling you which stock to look at, and you can decide your trade from there. Okay. Now, if you kind of look between this one and this one, the biggest difference between these two charts is kind of like the thickness in the candles, right? It's not, it's more candles, more filled candles, and more price action is basically what this chart is telling you that's happening here. Now let's kind of run this in real time so you can kind of get an idea. I'll start from here. Just play. Let's see if this thing can go through. I'll try to speed it up here. Okay. Probably won't let me do it. Still got charts open. Trading views crazy like that. So let me just restart this here. Let's just do it from. This is only in June. Let me go back that far. Let's just do it from right here. So press play. Now take a look at this movement in this chart, guys. You see the candles are going and going and going. Obviously, this is a good trade. Again, like I said, it wasn't a bad alert. If you knew what you were looking for, you kind of know how to play this. But um, did I bank on COHN? I don't believe I did. No, I didn't even trade COHN, but it was a good trade, a good alert. See the pricing wise is around the same as CARV was as well too. The only difference here between this and let me close that out. So take it. So keep in mind how that action went. Now let's take a look at CARV. And let's just start from probably where this one was alerted, which was around this area. And we'll press play. Now, if you can kind of tell, or if you can't kind of tell, between the two guys, the difference between the two is that the candles in between them are much more full than the other. And I mean, this was just such a beautiful play. It was really, really kind of easy to play. If you have your strategy set in place that you do, and obviously at some point like that, you might want to start to sell pretty much. But anyways, to go back to the question, what was the difference between trading that and trading the other? It's the spread, guys. The spread is the difference between the buys and the ask. COHN was a much bigger spread than CRV. So, like for example, look at this right here. The bid on this one is 23, and the ask is 28. That's a $5 difference in the spread. That is huge. That means if that order was to get filled, it's going to make a pretty significant dent between the two. And obviously, you'd want to make sure that you're trading something with a tighter spread. The tighter the spread, the better the chances are that you know you're going to get your orders filled, and that's something you definitely want to pay attention to when you're trading. Um, so keep that in mind. Looks like TSPT just got alerted. Hold on just a second. See, like, look at that. Look at this spread right here. This is real time. You guys are catching this alert. But anyways, um, yeah, this is looking good right here. So I definitely would consider looking at this, especially during pre-market. Right now, it's kind of overextended. So I'll wait for some pullback. And once there's some pullback, if it levels out and it maintains some support, then I'd look to get in on the next go around of the moving average changing and, you know, play from there. But anyways, let's not go back into that. we'll skip that for right now. But yeah, that was the difference between the two trades from COHN and CRV. Keep in mind those spreads. This right here is a pretty decent spread. It's not too far away. Um, so I would be willing to trade that. Now, look at CRV right now. I mean, this is just pre-market, pretty tight spread. So hopefully that answered your question, Sally. That was one of the things that I consider when I'm getting alerts like that, and let's say it's two different stocks with the same price range. Let's say the chart looks similar. The next thing I'm looking at as well too is something like the spread, the bid between the bids and the ask. Um, I'm gonna see which ones are closer. The ones that are closer, I'm gonna trade because it's more likely that those orders will get filled that I place. I don't want to be sitting on the order waiting for it to get filled and all of a sudden it jumps from one thing to the other drastically. Okay, so hopefully that helped you out with answering that question. But other than that, guys, I mean everything else was um, really no need to go over. I mean the everything that we traded alert wise was pretty well. Let me see if I can just find some random things. Like let's take a look at MSTL. I don't know how it's doing right now, pre-market right now, but oh, let me get out of this replay thing. It's NTSL. Okay. So yeah, so this one did good as well too. But that's again too when you notice that charts are choppy, it just means the price action really wasn't there. Um, I mean, there's some there, but just probably bigger spreads in between the bid and the ask for you guys, just to kind of keep that little tidbit in mind. Um, yeah, so this is MTSL. This was alerted. Um, so yeah, so if you guys can kind of get an idea here, pretty much like usually when the stock is going off, it's being alerted. Excuse me, it's running and it's running in its peak. Like I said, I usually wait for the moving average to come back down before I start to enter in again and being a bullish trader for me to want to jump in again. Here, I wouldn't have gotten until probably around this area here, and I wait for it to make a green to red move. I don't do red to green. I do green to red because I'm entering in on the red because I don't expect it to go any lower than that. That's just one thing that gives me a little bit more confirmation. Um, and some insight for you there. But that's pretty much how that went. I mean, there was a lot of good plays last week, guys. I mean, it was last week was just amazing. $25,000 week, which was pretty good. I'm not going to go over all those trades because we'd be here all day. But anyways, the main question here was to answer the question about choosing one alert over the other, and what are some of the things I look for. Because again, the alert will just point you on what stock to trade that's about to move. It's not going to help you. It's not going to tell you to get into a trade and get out of the trade. But you should know as a trader when you're looking at your trade, you should have a strategy in place that is how you trade because these stocks are going to move one way or another, and your trading strategy should be in to where it should be in. All right, guys. So like this video, do whatever you want. If you have any questions about it, let me know. Just message me or anything like that. But hopefully, again, this gives you some insight on the spread action. Um, is one thing that I look for, and I also look at things like the float, if it's shares out there, little things like that, which is why on my Weeple settings I have I have the level 2 here. I have key stats here that I look at. I want to quickly glance at before I decide to make a decision. So it's a little bit more insight that I look into. The alerts will just tell you, hey, look at me. It's not going to tell you to trade me. All right. So remember that, guys. All right. So I'm gonna get back to this pre-market action. Hopefully we get some winners today. Again, until then, stay green.